Good evening, everyone. Thank you so much for being here for Tackling Taxes, the 2023 tax season. This is part 3 of our 3-part series, and we really appreciate you all being with us tonight. What turns out to be a little bit of a rainy Wednesday. If you haven't or didn't get a chance to join us for parts 1 and 2, you can find both of them on our YouTube channel, our YouTube page. The other topics are covered. We've covered a really wide range of topics throughout this series, and tonight we'll be covering self-employment obligations, work classifications, and the Taxpayer Bill of Rights. We are joined by staff members from both Brooklyn A and Grow Brooklyn, so you hear a little bit about both organizations, and we will also be hearing from the office of our sponsor. We're so thankful and grateful to New York State Senator Roxanne Prasad for sponsoring this series and for being a continuing supporter of civil legal services and particularly tax services for people across New York. We have with us tonight the Senator's Chief of Staff, Taniqua Strong, and I wanted to give Taniqua a chance to say a few words. So Taniqua, go ahead.
Thank you so much, Will. Good evening, everyone. Welcome to the final Tackling Taxes, the 2023 season webinar with Brooklyn A and Grow Brooklyn. And if you haven't joined us for part 1 and part 2, you definitely want to catch the replay. This is what I need you to do. Take a moment right now to like, share, comment, share on your social media page, and invite people, invite your friends and so forth to hear this great webinar. Just want to let you know on behalf of Senator Roxanne J. Prasad, as we know that Senator Prasad cares for her constituents and she looks for events to empower her constituents every time she has a chance. And so we want to let you all know that we have on March 23rd, we have our Easter egg hunt, our annual Easter egg hunt, which will be at Canarsie Park from 11 a.m. to 2 p.m. Again, our Easter egg hunt, which will be hosted at the Canarsie Park from 11 a.m. to 2 p.m. And please join, follow us on Senator Prasad on Facebook and Instagram so you can sign up today. We are expecting 400 plus children, so you want your child to be a part of the Easter egg hunt event. And so just stay tuned that on tomorrow, if you're anywhere in the vicinity on tomorrow, we have our food distribution, which will be held at 408 William Street. And feel free to follow us. Good evening, Kamala. Feel free to follow us as well on social media to find out our exact location. We would definitely share it with you. And you can contact our office at 718-649-7653. Again, our number is 718-649-7653. Again, thank you. And don't forget, like, share, and comment.
Thank you so much, Taniqua. That sounds like a lot of fun, the Easter egg hunt. We really appreciate your support, very consistent support of our work, of the work of our peers. And we should have in the chat, if you see, you can find the contact info for State Senator Prasad, as well as links to the previous parts of this series. So please do feel free, as she said, to promote it, share it around. Yeah, there's a lot of really great, valuable resources in all 3 parts of this series. So our presenters tonight, you'll be hearing from Kelly Lai, who is a staff attorney of our Consumer and Economic Advocacy Program, and Danny Washington, who is a self-employment tax preparation coordinator for Grow Brooklyn. Thank you both so much for sharing your expertise tonight. Before we dive into the program, I'll tell you a little bit about Brooklyn A. We offer a lot of different services, but I'll also just say, so we're going to go through the full program. Kelly and Danny will do the full presentation, and we'll have a question and answer section at the end. So I asked, please hold your questions until then. You can write them in the chat. You should see a chat box at the bottom of your Zoom screen, a little Q&A. And you can type your question in there, or if you'd like to ask your question verbally, you should see a raise hand button, and that'll signal to me that you'd like to ask your question verbally. I'll be able to unmute you, and then you can ask your question directly. And again, we'll hold all the questions until the end. So if you're unfamiliar with Brooklyn A, We are a free legal service provider. We believe that New York should have equal access to legal services to seek justice, make their voices heard, and overcome systemic racism and oppression. We were established in 1968 as part of the War on Poverty, and we believe that attorneys have a critical role to play in combating poverty, inequity, and racism. Our civil legal services, organizing efforts, and educational resources assist our clients and their communities in defending and mobilizing against harassment, displacement, and gentrification, and asserting their rights. So we have three main program areas I want to tell you about. You see them on the screen there. First is our Preserving Affordable Housing program, which does eviction prevention, anti-harassment work, repair and essential services work, as well as tenant organizing work. Our Community and Economic Development program has the Commercial Lease Assistance Program for small business owners. We also work closely with nonprofits, help both nonprofits and small businesses negotiate rent and arrears. We also, for nonprofits, do incorporation and startup services. And finally, our Consumer and Economic Advocacy program, which houses our Lower Income Taxpayer Clinic, which is hosting us tonight. We have a lot of great resources there, and I'll just plug quickly. We have a bi-weekly tax table. This is a virtual one-on-one session, totally free for you to speak with tax attorneys and experts from both Brooklyn A and Grow Brooklyn. We'll have a link in the chat there. You'll be able to sign up for one of those times. You get a 15-minute slot, and if you have questions that go beyond that, you can always follow up with us later for additional services. The CEA program, just want to also point out, we do foreclosure prevention, deed theft cases, and predatory lending work. We also, within the CEA program, have a domestic violence program, which offers services including orders of protection, child custody, support, and more. And we have a wide range of services, as I said. If there's something that you need but you don't know, we don't do it. We do have a lot of referral partners, and we can steer you in the right direction. If you reach out to us, we can at least help you, get started. And to reach out to us, you can see the numbers there. The email is info@bka.org, our website bka.org, and our phone number is 718-487-2300. And now I want to turn it over to Danny Washington from Grow Brooklyn. He's going to tell you a little bit about all the other services in addition to tax preparation that they offer, and then he will start the program. Take it away, Danny.
All right, thank you, Will. Yeah, Grow Brooklyn has been around for over 20 plus years, and the services that we provide is not only just free tax preparation, but we also provide foreclosure prevention, estate planning, and legal services, and financial capabilities in housing counseling. We have attorneys on staff that can assist with your foreclosure, and counselors to actually negotiate and be an advocate on your behalf. The estate planning services, is pro bono with a small little fee where we can create a will for you. Also, we'll give you information on the Black home ownership project. We'll assist you on trying to get you a home in New York City. In the financial capabilities, we have free one-on-one counselors that you can talk to set up a budget and savings. We're HUD-CEP certified, and we're preparing individuals and families to be able to navigate the home buying process. So I'm going to just go ahead and start it off. Who I am, my name is Danny Washington. I'm with Grow Brooklyn. I've been with Grow Brooklyn for almost 5-6 years. I was started off as a volunteer tax preparation in Nevada. And now I am currently the coordinator of the self-employment tax program. And I'm here to tell you about the purpose of the program. Pretty much the program was established because due to the pandemic, there was a boom of gig employees, freelancers, and individuals that are self-employed or wanted to start their own business. And they needed assistance. It's a new operations for them. And they need assistance to navigate, okay, what kind of entity should I have? Or what are my tax filing obligations? Or what type of records that I should keep in order to maintain my business? So that's where I come in. I'm been in the tax business for over 20 years. I'm an IRS enrolled agent, and I have a master's degree over at Long Island University, not only in economics, but a bachelor's in economics and a master's in tax accounting. And I've done every tax. I've been involved in any tax that you can name of, such as in an individual, business, international, you name it, I've done it. So we're going to start off with taxes for the self-employed. Next slide. You move forward to the next slide. Next slide. All right. So for many of y'all, being self-employed is very exciting. It's a very exciting venture to go out and start your own business, or whatever hobby or whatever business that you are passionate about. Whether you're passionate about selling jewelry or fixing computers, whatever it is your passion, you want to make a profit off of your passion. So when you're your own boss, when you're self-employed, when you're your own boss, you get to work how you please, when you please, where you please, and when you please. That only applies to a few people who have systems in place where they can actually work whenever they want to. Well, most of us, we have to put in a lot of hours and a lot of work in order to even become profitable. So tonight, what we're going to do is just going to go over what defines a business versus what defines a hobby. So I'm going to speak more on that a little bit later. But right now, I'm just going to go ahead and talk about the different business structures you can choose when you start your business. I have many of my clients ask me, what entity should I use to start my business? I'm just starting out and I have little money. Well, there are many different structures. You can start off as a sole proprietorship. You can start off in your name, or you can form what is called a DBA, or doing business as, which is a fictitious name. And you can also apply for an EIN number, and which is tied to your DBA, and you're in business. You're officially in business. You can start off as a corporation. You can start off as an S corporation or a C corporation. Partner, if you have two or more individuals that want to join you in your venture, you can start off as a partnership. You can form an LLC. You can form an LLC where you can open up your business, operate on a corporation that offer corporate protection while you're operating as a sole proprietor as an LLC. Those are the many structures that you can choose. And that's where that's where I come in, and I can advise you on what's your best structure that you can use. I can also counsel you on self-employment tax and estimated tax payments. And that's something no one really talks about when you're freelancing. They tell you you're responsible for your own taxes, which is true. But they don't tell you what type of taxes that you are responsible for. When you're self-employed, of course, you are subject to federal, state, and local taxes. But nobody really talks about self-employment tax, which is you paying into Medicare and Social Security. And many tax advisors don't really talk to their clients about estimated tax payments. What it is, what estimated tax payments are you prepaying to put it simpler, you're prepaying your taxes for the next year. And you are required to do that if you have a tax liability, if you're self-employed, or you have your small or a small business, and you have a tax liability on your personal return of over $1,000. You are then required to make estimated tax payment throughout the next year. So that way, it's just an estimate. If you pay more than your taxes for next year, you're going to get a refund. If you pay less, then you have to make up the difference. And the estimated tax payment structure is structured that you make 4 quarterly payments. And the deadlines to make those quarterly payments are April 15th, June 15th, September 15th, and January 15th of the next year. And that's very important to make those payments, because if it's a requirement, if you don't make those payments on time, you will be penalized. And it's just a small penalty, but you don't want to pay more money to the government than necessary. Then we're going to talk about your tax filing obligations. Well, if you're a sole proprietorship, you are obligated to file not only just your 1040 return, but you're going to fill out what's called a Schedule C. That's along with your 1040 return. Now, the Schedule C outlines your income, your total income for the year, and all of your expenses throughout the year. And whatever, if you have more income than expenses, that's your profit, and that's what you're going to be taxed on. And that's where you're going to, and you're also going to be taxed on your self-employment tax, Medicare, and Social Security, as I mentioned before. That is the main form that is used if you ever want to apply for financing through a financial institution or apply for government certification. They want to look at your tax returns for that year, and they're actually going to look at your Schedule C. Now, for the business assets, depreciation in Section 179, well, your business assets are any asset that's used to assist you in performing in your business, such as a cell phone, or your computer, or any inventory that you purchased. Those are some examples of business assets that can be used for you to help assist you in making a profit for your business. Now, the business assets are subject to depreciation. Now, what depreciation is the business use of that particular asset over a period of time. Typically, straight line depreciation, usually a typical asset such as a computer, is a straight line depreciation over a 5-year period. So not only you're taking the expense, you're splitting up the expense over a 5-year period. And that's what depreciation is. Now, the Section 179 deduction, well, it's also it's a special depreciation, bonus depreciation, excuse me, where you can expense certain assets in full for only 1 year. But that's going to be well beyond our scope for tonight. So I'll get into that whenever you have a consultation with me, and we'll talk more in depth about it. Now, we're going to talk about what expenses are deductible and which are not. The way I explain to my clients what expenses are deductible is that any expense that are used in operating your business, that's classified as an expense. Many of my clients confuse expense with liability. Now, liabilities are any loans or credit card debt that you charge against the business. They seem to think that is as an expense, and it's not an expense. Personal expense, such as paying for your groceries, clothes, any personal item, anything that's any expense that is classified as personal, is not deductible against your business. Next slide. So we're going to talk more about your business versus your hobby. Some people have a hobby that they are passionate about, such as video games, YouTube videos. Anything that could be classified as a hobby, which you can make money with. But to be a true and to be an actual business, you will have to answer these questions. You will have to answer these questions. Whether whether you can truly have a business according to the IRS. The answer will determine whether you can deduct the expenses from your income. There's a rule in the IRS of a hobby lawsuit, whereas if the IRS deems that your business is a hobby, your expenses are limited to whatever income that you receive. So you cannot write off any, there are many write-offs you can't take. The IRS has a list of factors of determining whether your pastime is more than a business than a hobby. Of course, one factor is not decisive. The IRS says that all facts and circumstances are taken into account, but here are the most common factors which determines whether your business is a hobby or an actual business. Do you carry on the activity in a business-like manner? Meaning, are you actually is there a profit motive for your business? Meaning, are you actually going out getting contracts or getting customers, or are you actually selling your items? And are you selling your items and performing services throughout the hours of operation of business operations? Are you signing contracts? Are you responsible for contract or employing contract employees, or actually employees, W-2 employees or contract employees? Do the time and effort that you put into the activity indicate that you intend to make it profitable? So you have to put in more than 40 hours if you put in more than 40 hours into your hobby or your business, well, not even your hobby, into your business, that could satisfy the requirements for the IRS that you are operating in a business like that. Do you depend on the income from the activity for your livelihood? That's very important. Do you have a second job? Do you have a third job while you're carrying out your operations? The IRS may not look favorably on it and determine that it may be just a hobby. Are your losses due to circumstances beyond your control, or are they normal startup? Or are they the normal startup, or are they normal in the startup phase of your type of business? Many people who start businesses, they operate in a loss. That's where a good bookkeeper or an accountant will come in and determine what's going on with your business. Why are you losing money? What's going on? Are you putting too much money into certain areas? Or is certain products are not selling? You have to determine why are you losing money? Why are you operating your business and you taking losses? Next slide. Do you truly have a business according to the IRS? Well, if you have a business, if you're operating a business, what are you doing? What are you doing within your business? Are you changing your methods in order to improve profitability? Do you have advisors that have the knowledge needed to carry on the activity as a successful business? Do you have an accountant? Do you have bookkeepers? Do you have attorneys on staff? Which most of us don't, but there are some other organizations that will assist you in improving your business operations. So you got as a business owner, you have to take steps in improving your business, improving the profitability of your business. Were you successful in making a profit in similar activities in the past? So pretty much if you started a similar business years ago, how were you profitable? What did you do to make that business profitable? What changes have you made? What is it, the product, or is it the economy that's affecting your business? Also, does the activity make a profit in some years? If so, how much? Because that's very important. If you're losing money 1 year, in your first year, second year, and you make a profit in your third year and beyond, that's great. The IRS will then leave you alone. But if you're just not making any money, 3 out of 5 years, there's a rule. 3 out of 5 years that you're operating your business or being self-employed, they're going to actually look into your financial operations. They're going to look into your business operations. They're going to ask you questions. What's going on? How come you're not profitable? Can you expect to make a future profit from the appreciation of the assets used in the activity? So the question is, do you truly have a business according to the IRS? Pretty much the IRS, as I mentioned before, the IRS assumes an activity is for profit if it makes a profit in at least 3 of the last 5 tax years, including the current year. So pretty much starting a business and operating a business can be challenging. So pretty much if you have everything together, if you have your financials together, if you have your marketing together, there are organizations that will actually help you and assist you in your venture, in turning your small business into a profitable venture. Next slide, please. As I mentioned before, we talked about it briefly about the Schedule C report. Now, as I mentioned before, the Schedule C reports the business income and expenses on the Schedule C, and it flows on your personal return, which is your 1040. Next slide, please. Okay, we're going to talk briefly about worker classification. Now, there's 2 types of worker classification. One is a W-2 employee, and the other is an independent contractor. Next slide, please. An employee is generally considered anyone who performs services, and if the business controls what it will be done. So what that means is when you go to your W-2, when you go to work, when you work for an employer, that employer actually controls the time that you come in to work. It designs your schedule, when you're supposed to come into work, give you the tools to actually perform on your job. And also, and this is important, if they are classified as an employee, the employer is responsible for the withholding of your taxes, which is your Social Security, Medicare, as well as federal and state withholdings. And there are employee benefits, and the employer is obligated to have employee benefits, such as health insurance or 401k. As an independent contractor, it is what it is. You are contracted with that, you're in contract with an individual that wants you to perform a service. Typically, doesn't have to be at the location. There's no set time where you have to complete the job or perform the services. And an independent contractor is responsible for their own taxes, such as paying in the self-employment tax, federal, state, and local taxes as well, and any other applicable taxes that may be applicable to your performing your services. Next slide, please. Whether a worker is independent contractor or an employee depends on the relationship between the worker and the business, which I mentioned before. There are 3 categories to consider: the relationship of the parties, such as a written contract or employee benefits, as I mentioned before; behavioral control of how the worker does their job, such as setting schedules, when they're supposed to come in; and financial control, such as a W-2. Not necessarily 1099 NEC, but typically a W-2. Next slide, please. Now, this is very important when you're hiring employees or independent contractors. You have to determine misclassifying them as independent. Most employers they usually save money by misclassifying their workers as independent contractors, which is illegal. Because if you truly are performing services as a W-2 employee, you are held to certain rights where you come in, you're supposed to come in where you are coming in, where you're supposed to come as scheduled as a W-2 employee. The employer is not withholding taxes like they're supposed to as an independent, as a W-2 employee. That is illegal. It adversely affects the employees because the employee share of the taxes is not paid and the employee share is not with them. That's the whole purpose of it. That's why it's illegal. And usually the Department of Labor will send in auditors to reclassify that employee and penalize the employee. Next slide, please. Okay, Grow Brooklyn Free Tax Prep Services. We offer the Volunteer Income Tax Assistant Preparation, which is an IRS-sponsored tax preparation program to promote tax law awareness and understanding, prepare free and accurate tax returns for low to moderate income individuals, such as the elderly and people with disabilities, encourage personal asset building through incentives like opening up a bank account and tax incentives like contributing to an IRA, college saving plans like the 529 accounts, allow taxpayers to avoid the services of predatory commercial tax preparers. The self-employed tax prep program is a year-round service for self-employed, where small businesses and freelancers, gig workers who have up to $250,000 in expenses, as well as $320,000 in income. You can come in and we can actually assist you with estimated taxes. We can actually prepare your estimated tax vouchers for you, do some tax planning, come in for some tax advice or advice on how to keep records. And pretty much that's about it. And my contact information, you can contact me at my email address at danny@growbrooklyn.org, or you can just contact, if you want to contact Grow Brooklyn directly, you can contact Grow Brooklyn at freetaxes.org, growbrooklyn.org. Thank you very much. Y'all have a wonderful week.
Hi everyone, and thank you, Danny, for that presentation. Again, thank you everyone here who is here tonight for the last part of our three-part series. Again, special thanks to Senator Prasad. My name is Kelly Lai, and I'm a staff attorney at Brooklyn Legal Services Court-Based Consumer Economic Advocacy Program. So in my portion of the presentation, I'll be going over Taxpayer Bill of Rights. Next slide, please. And just a side note, and thank you, Ken Stevens, for noticing that the deadline for 2023 tax return is April 15th. That's a Monday, and the extension is October 15th. So that would be 6 months later. If you do owe taxes, you do need to pay your taxes by April 15th. The extension does not give you an extended time to pay your taxes, FYI. So the Taxpayer Bill of Rights, it's a cornerstone document that highlights 10 of the fundamental rights taxpayers have when dealing with the IRS. So first and foremost, taxpayers have the right to be informed. So that means you have the right to know what the IRS is doing and what you need to do to comply with the tax laws. So you're entitled to clear explanations and the procedures on all the forms that the IRS sends to you. So the notices have to include any of the amount of taxes you owe, interest, and penalties, and it has to explain why you owe these amounts. If the IRS is fully or partially disallowing some of your refunds, it has to explain why they're doing that, why they made changes. If they're adding additional taxes, it has to explain the process of how they're doing it from examination to collections in the very first letter that it sends to you. It should also explain the options for review by an independent office of appeals or another taxpayer advocate service. So that's a unit within the IRS that is designed to help taxpayers who may need assistance. And if you do enter into the payment plan, also known as installment agreement, the IRS has to send you annually a letter of how much is still owed and how many years are left if there is an installment agreement plan. So the second right is the right to quality service. So you have the right to receive prompt, courteous professional assistance when you speak to an IRS agent or to speak to a supervisor about any inadequate service you feel that you have received. The IRS usually provides a contact number at the top right corner of the notice or letter when you call in. And generally when you call in, an agent may say, "Hi, my name is so-and-so, this is my ID number." So make sure you jot that down when you are contacting the IRS and the date that you made that initial contact. The IRS should only really contact you between 8 a.m. and 9 p.m. and only if they already had prior communication. If you're receiving out of the blue someone claiming to be from the IRS, that's probably a scam. Immediately hang up and call the IRS directly and do not answer any personal information to that person who claims to be from the IRS. The IRS should also not be contacting taxpayers at their place of employment if the IRS knows or has reason to know that the employer does not allow such contacts. And again, the IRS does not make any aggressive phone calls saying that you owe taxes and you have to pay, otherwise we'll put you to jail. The IRS initial contact is always by letter. So if you receive any phone calls claiming to be from the IRS, be very careful and definitely do not share any information. And again, the IRS has to include information about your right to how to get services such as the Taxpayer Advocate Service, or you can also contact an organization such as ours for Low-Income Taxpayer Clinic for additional assistance. And if you feel that the agent isn't giving you quality service or is being rude to you, you can file a complaint here at www.ticta.gov. So the third right is the right to pay no more than the correct amount of tax. No one likes to pay taxes, and you shouldn't have to pay more than what you actually owe. So if you receive a bill from the IRS saying that there's an error, write to the IRS within the time frame given, and make sure you provide any photocopies, receipts of why you think the IRS made a mistake. And when you do send the IRS documents, just make sure you keep a record on your end and mark the date. If you have a tracking number, make sure you save that as well. The IRS is still very overwhelmed since COVID. A lot of mail gets lost. We've seen that a lot, or simply just never gets sent to the IRS. So make sure you are diligent and saving all your documents. And if you disagree with an adjustment that the IRS made, make sure you request within 60 days when the IRS has sent you a notice saying that they are making an adjustment. So this also preserves the right to challenge the proposed adjustment in court if needed. And the fourth right is the right to challenge the IRS position and to be heard. So taxpayers have the right to raise objections and provide additional documentation in response to formal IRS actions or proposed actions. So meaning they made an adjustment to your tax return, for example, or they're saying you owe additional taxes. Again, you generally have 60 days to tell IRS, I don't agree, and you can supply them with any documents you have, any receipts to prove that the IRS made a mistake. And we've had clients who received a letter and the IRS is simply wrong in this case. The IRS definitely makes a mistake. Even though it's a very big entity, you would think that they have all the records. That's false. The IRS makes mistakes all the time. So make sure that you keep a record of everything and to show that you are correct and the reason that you think the IRS made a mistake. So if the IRS does not accept your proposed position, it will send a notice proposing the tax adjustment. So this is also known as the statutory notice of deficiency. So this gives you the right to challenge in the US tax court before you have to pay the taxes. So to do this, you have to file a petition within 90 days of the date of the notice, or 150 days if you are outside of the United States. And the IRS, if you do not challenge this, the IRS can and will notify you of their plans to levy your bank account or other property, or even garnish your wages. But you generally do have the opportunity to request hearing before the Office of Appeals. So this leads us to the next right. So that is to the right to appeal an IRS decision in an independent forum. So you are entitled to a fair and impartial administrative appeal of most of the IRS decisions. So the IRS commissioner says that it has to ensure there's an independent IRS Office of Appeals. So this office is separate from the IRS that initially reviewed your case. So generally, this appeals office should not discuss your case with the IRS to the extent that the communications may appear to compromise its independence. So if you fully pay taxes and the IRS denies your tax refund claim, or the IRS takes no action on the claim within 6 months, you can file a suit. So to do that, you'll file a suit in the US District Court or the United States Court of Federal's claim, and you generally have 2 years to file a refund claim from the date the IRS mails you that very first notice that denies your claim. And next slide, please. So this is an overview of the IRS appeals process. So the IRS compliance action, they send you a notice saying that you owe taxes or they're denying some of your refund. You can file an appeal, and then the IRS reviews it. And if they don't agree, then the appeals office, you can send documents to the appeals office and they can review the documentations that you have. And then they will make a decision whether they agree with the IRS or agree with you. Next slide, please. And the sixth right is the right to finality. So with the IRS, generally the statute of limitations is 10 years from the date of assessment. What does that mean? So let's say you filed a tax return this year and you owe taxes. The IRS has 10 years from this year to collect from you. After that 10-year mark, the IRS cannot collect from you. Do note that the IRS statute of limitation is 10 years. So let's say you file in 2024, then 10 years would be 2034. But New York State, the statute of limitations is 20 years. So the New York State actually has an additional 10 years of which they can collect from you. So just be aware. And another thing is that the IRS has 3 years from the date you file your return to assess any additional taxes that it thinks you may owe. The only exception is that the IRS finds that there's fraud, then throw these statute of limitations out the window. It does not apply. And if you think you overpaid your taxes, you can file a refund claim by sending an amended return. So generally that's 3 years from when you filed the original return, or 2 years from the date you paid the tax, whichever date is later. And the seventh right is the right to privacy. So taxpayers have the right to expect that any IRS inquiry, examinations, enforcement will comply with the law and be no more intrusive than necessary. And the IRS should respect all your due process right, including search and seizure protections and collection due process hearing. And there are limits to the amount of wages that the IRS can levy to collect taxes that you owe. So part of your wages should be protected, but the IRS can collect from your Social Security. Social Security is protected from New York State, but the IRS does have a broader reach. If you feel that the IRS is overreaching, definitely make a phone call saying that they are overreaching. They should not be collecting because this is more than is necessary. And the IRS can't seize certain personal items, such as anything that's necessary, clothing, mail, or furniture or household items. It also cannot seize your home without court approval. So if you hear or receive any letters saying that your home is foreclosed by the IRS and they're going to take your home, that's most likely a scam. and just throw that letter out, and always call directly the IRS and to make sure that there isn't anything else or maybe an identity theft that is happening with your case. The next right is the right to confidentiality. So taxpayers have the right to expect that any information they provide to the IRS will not be disclosed unless authorized by you or by the law. So in general, the IRS may not disclose your tax information to third parties unless you give permission. And we all know that the IRS with Trump still has not disclosed his tax returns. So the IRS is following the right to confidentiality. And the IRS can't contact third parties to get information to adjust or collect taxes owed unless it gives you reasonable notice in advance. And some protections that you have with an attorney also applies with communications with the IRS. So if you do have an attorney for whatever reason, make sure you go through the attorney to speak to the IRS to assist you with any of the tax cases that you may have with the IRS. So this goes into the next right, the right to retain representation. Taxpayers have the right to retain an authorized representative for their choice to represent them in dealings with the IRS. They do have the right to seek assistance, such as from Brooklyn A, our low-income taxpayer clinic, if they cannot afford representation. So in most situations, the IRS must suspend an interview if you request to consult with a representative, such as attorney, CPA, or an enrolled agent. And if you do have one of these representation before the IRS, you should ask them to submit a written power of attorney so that they can speak directly to the IRS and not have to contact you. And lastly, but not least, the right to a fair and just tax system. So the taxpayers have the right to expect tax system to consider all the facts and circumstances that might affect their underlying liabilities, ability to pay, or ability to provide information timely. So if you cannot pay your tax debt in full and you meet certain conditions, you can get a payment plan with the IRS. You can set to pay this over time. I believe usually it's around 72 months and generally a monthly payment plan. You can also do an offer and compromise, and we here at Brooklyn A definitely assist with filing that application to ask the IRS to settle your tax debt for less than the full amount. So you can do this if you are in financial trouble and you believe you do not owe or part of the tax debt, or paying the full amount will it cause financial hardship. So we prepared multiple offer and compromises in the past, and we had a client that had issues of filing tax returns, and the IRS filed all the taxes on his behalf, and he later became disabled and was receiving workers' comp, and paying the full amount would just be impossible and cause undue financial hardship. He owed about $10,000, but because of all the hardship he was facing, the IRS was reviewing his case and allowed him to settle for $1. So an offer and compromise is also an option if you definitely have financial hardship, and you can try to negotiate with the IRS to settle your debt for a lower amount. Next slide, please. So what are the best practices when you do receive an IRS notice? So first and foremost, don't ignore the letter. These are about your federal tax returns, and they should explain the reason for the contact and give you instructions on what to do next. Do not panic. Definitely read the notice. If the IRS changed the tax returns, whether they disallowed a balance or disallowed a refund or increase your taxes, you should definitely compare the information to the tax return you filed. Maybe there's an identity theft issue. Maybe you never filed a tax return. So make sure you read everything and to respond timely. So if there's a specific date, you should definitely respond, even if it's to say, I need more time. The IRS will allow that most of the time, but they need to make sure that someone is contacting them so they know that you're actively doing something to try to resolve whatever tax issues you have. Keep a copy of the notice or letter, and the IRS, again, is not the most tech savvy, and they lose a lot of documents. We've seen that with a lot of our clients, or USPS simply just loses your mail. So make sure you always scan and keep a copy on record So if you need to speak to someone to explain your history, you already have everything ready to go. And remember, there's usually no need to call the IRS. Typically, you only need to call if you don't agree with the information or there's identity theft involved, or the IRS is requesting additional information. So you can write usually to the address listed on the letter, or you can definitely call them directly just so they know you're in that process of trying to find documents. And lastly, avoid scams. Again, the IRS usually never contacts a taxpayer. They certainly never threaten you and say, if you don't pay, we'll put you in jail. If you receive a text, email, or phone call from the IRS and you had no expectations, no reason to receive any of these communications, mark that as spam. And if you are still worried, call the IRS directly using the official phone number. And so we have seen definitely a lot of increase since COVID, and a lot of scammers out there trying to get stimulus checks, trying to get the additional refunds from child tax credit. So definitely be very wary. Next slide, please. So here are just some of the websites for volunteer income tax assistance sites, such as Grow Brooklyn, that assists with self-employment individuals. And here's the link to IRS individual account where you can create your online account to see how much you owe or when you can expect the refund. And this is the last year for 2020 for you to claim the economic impact payment. You can still claim the 2021 economic impact payment, also known as the stimulus checks. You can call the IRS at this number listed or file a form 3911. Next slide, please. And that concludes our presentation today, and we'll open the floor for questions.
Excellent. Thank you so much, Kelly. Thank you so much, Danny. We will now, open up the questions first real quick. I will just have on the screen here the contact info for both Grow Brooklyn and Brooklyn A. You can see we've got the emails and phone numbers and websites, as well as our addresses. You're able to stop by the offices for either organization, and we can help you out. So I think we have those in the chat already. So I'm going to stop the screen share while we do the Q&A. As a reminder, you can ask your question over by typing in the Q&A box, or you can raise your hand and we'll answer your question verbally. So seeing we do, yes, thank you, Ken. I think Kelly caught that too. Just to clarify again, the tax deadline for 24 is April 15th. For taxes for 23, we're reusing some slides from last year, so apologies for the confusion there, folks. But yes, for 24, the deadline is the 15th. Other questions people have? Like I said, feel free to raise your hand if you have a verbal question like to ask, or you can type it into the chat. Also see a question from earlier. Are we providing copies of the series webinar? Yes, the whole series is, you can find it on the Brooklyn A YouTube channel. Parts 1 and 2 are already up there, and we will be posting part 3 from tonight tomorrow. So you can make sure to watch the whole thing. And if you need additional tax resources, please don't hesitate to reach out to us. We are happy to help. Okay, let's see. Recording be shared. Yes, the recording will indeed be shared. Thank you for that question. Like I said, it will be on the Brooklyn A YouTube channel. All right. I think just looking back through our chat here, I see some other. Okay, so we have a question from Cheryl here. If you're paying an installment plan after 10 years, is it removed due to statute of limitations?
So the 10-year statute of limitations only for the IRS, and it's from the date of assessment. So depends on when the date of assessment is. Usually it's when you filed, but if you have not filed, the IRS may have filed a substitute tax return for you. So it's from that date. If you are in an installment payment plan and you know for sure that 10 years has passed, you can simply just call the IRS and let them know to stop collecting from you. But if that plan is in place, I believe the IRS will continue to collect until it is completed. And again, New York State is 20 years.
Perfect. Thank you, Kelly. Anita's asking where the recording will be found. It'll be found on, you can go to YouTube, the Brooklyn A YouTube channel. We'll have it posted. Currently, parts 1 and 2 are already up. And part 3 will be uploaded tomorrow after we're done here tonight. We'll also be sure to email everyone who attended tonight. I'll send you the links to all 3 parts, as well as the contact info for both our organizations and Senator Prasad's office. Let me make sure that that is added in there. Seeing another written question. So from Dorit, we have, thank you for the informative presentation. I agree, Danny and Kelly, thank you. I am an independent consultant on a 1099. I also have income from Social Security and pension. Can I file one time, or do I have to file quarterly for 1099 earnings? Danny, maybe you want to maybe take that one with some self-employment question there.
Yeah, it really depends on if you have a tax liability from the previous year of $1,000 or more. Then you are required to make estimated tax payments. But it seems like if you're a 1099 employee, you're under the safe harbor rules, so you're not really required to make any estimated tax payments, because it may be your tax liability is under $1,000, so you're not required to. But keep in mind, if you do have a tax balance due at the end of the year, you are required to pay that in full by April 15th of this year.
Perfect. Thank you, Danny.
Thank you.
All right. And a thank you from Dorit. Other questions people have? All right, we're making sure we're adding all of the contact info into the chat now. If you didn't get a chance to grab it before, and like that slide showed, and again, we'll be sending all of this out to you tomorrow. So you'll have, the contact info for Grow Brooklyn, for Brooklyn A, for Senator Prasad's office. Perfect. Thank you, Kendra. I'm looking back through the chat throughout the presentation, making sure we didn't miss any other questions. Okay, not seeing others. Any other hands raised? Not seeing them. Okay. All right. Unless anybody else, last call. If there's any other questions, people want to type, people want to ask verbally. Otherwise, I think we'll wrap it up there. I want to say a huge thank you to Danny and Kelly for your incredibly informative and valuable presentation. A huge thank you from Brooklyn A to Grow Brooklyn. You've been incredible partners on all of our tax work, so we're really thrilled to continue this partnership, so thank you. And another plug for the tax table. Again, this is bi-weekly. You can find there every other Thursday from 5 to 7. You can go on our website or find it on our social media, the link to sign up. You can pick whatever 15-minute time slot works best for you, and then you'll be able to speak with a couple of tax experts who can answer any questions you have totally for free. And then if you have need for further services, of course, we can do an intake and help you with whatever your situation is. And a huge thank you also to Senator Prasad and to Niqua Strong, her Chief of Staff, for joining us tonight, for your continued work supporting civil legal services, civil services generally, and particularly your tax support during tax season. So thank you, everyone. Hope you all have a lovely night. Be on the lookout for an email from us with the recording tomorrow, and we hope to see you at our next event. Thanks very much.